initially the stock market was like, yeah, so, there's a war, whatever. The physical supply chain of things you need to eat, things you need to fill your car, things you need to ensure that A gets to B are being enormously and consequentially disrupted by this. And if the war doesn't end, and that's a whole separate issue about whether it can end and how it ends, it's very, very hard to see how you put this genie back in the bottle.
Welcome to Wealthion. I'm Wealthion founder Adam Taggart. 2022 has already seen more surprises, uncertainty, and instability than most thought possible when the year started. But what if the changes underway now are vastly more significant than we realize? Michael Every, global strategist at Rabobank, thinks that may indeed be the case. From his perspective, the geopolitical world order is now Balkanizing, a process started before but dramatically exacerbated by Russia's invasion of Ukraine. The shockwaves are just starting in his estimation, and they will disrupt trade, political alliances, financial markets, and the flow of the world's critical resources. In short, he predicts the coming decade will be very different from those of living memory. So strap yourself in and get ready to hear why, as well as what we as regular investors should be doing now to prepare. Michael, thank you so much for taking the time out of your busy morning to join us all the way from Singapore.
Well, it's a great pleasure to be here again.
All right. Well, Michael, look, you're always a totally fascinating and really enjoyable interview. You're one of the folks who I get requests every week to bring back onto the program. I have a lot of questions here for you. With a guy like you, I can literally go in way more directions than we have time. So I'm going to try to be as efficient as possible with all these questions. But first, let me just start it off at a very high level, like I like to do every time we talk, and ask you the general question and let you sort of set the stage. What is your current assessment of today's global economy and financial markets?
Okay, a mess would be an accurate word to describe it, a real mess. We are definitely seeing paradigms collapsing, potentially new paradigms emerging, and I think most traditional rules of thumb evaporating or no longer having meaning. But that doesn't mean there aren't any rules of thumb that we can look to. And what I argue is we need to look back in order to look forward.
All right. I got to dig into that teaser a little bit then. So looking back in order to look forward to, what do you mean by that?
Well, we are in a changing world, definitely. The war in Ukraine, we've been defining it as a meta crisis because it isn't just a war. It's a conflation of lots of different issues together, which will permanently change the global economy and global markets. That has obviously triggered extreme market reactions. Initially, we only saw that in commodities. Now we're obviously seeing it in stocks too and in FX. And of course, the Fed is a large part of this, but the Fed itself is to an extent being driven by what's happening in Ukraine, even if they don't recognize that fact in terms of the supply side effect, the push that you're seeing on inflation right the way across the board. And that isn't going to go away. That's made what was already a bad problem for them worse. And the same is true on supply chains, which are related to commodities. That was already a bad problem, which they were behind the curve on. Now it's permanently worse. So we are seeing all these shifts. And we are seeing some voices saying, well, obviously, fiat currencies are going to collapse. The dollar's going to collapse. The West is going to collapse. And we're going to see the emergence of some kind of new world order. Some are dubbing it Bretton Woods 3. Which itself needs to be unwrapped in terms of what was Bretton Woods and what was Bretton Woods 2. We can come back to that, but they're calling it Bretton Woods 3. My argument is that I agree with a lot of what they're saying in terms of things collapsing, but I argue everyone's collapsing. It's the East as well as the West. And that when you actually look at it, what you're arguing or what they're arguing is that you need to control commodities and supply chains and industrial production, which is value chains. And you then also need to have a strong military to control all of that and run a trade surplus to pay for it all. And if you do that, that's not a new theory. That's called mercantilism. That was dominant for hundreds of years in Europe. So you look back to describe how we go forward. And if you do think like that, the West collectively still has all the key cards to play. The East and these commodity producers in the East and China have very few. So that's my core argument.
All right, good. I want to dig into that in a bit, but you very serendipitously just mentioned the three big questions that I'd laid out for you here with Ukraine, Fed, and Bretton Woods 3. So let's start, if we can, with the Fed, just because you and I are talking on Tuesday night, May 3rd. So the evening before, we're all going to hear tomorrow from the Fed what it plans to actually do this month with rate hikes. I think the world expects them to do a hike of 50 basis points, but we will know for sure tomorrow. Of course, we'll get any additional color that the Fed wants to add here, and that's what the markets are probably really going to react to tomorrow. But I've said on this program, I think perhaps one of the biggest decisions that sort of our destiny hinges on, at least in the next couple of years, is how committed the Fed is to hiking interest rates to tame inflation. There are a lot of the experts I talk to who say the Fed is going to hike until something breaks, and then they're going to capitulate and pivot and go back to easing. There is a minority of folks I'm talking to who are saying, I actually think the Fed's a lot more committed than folks are giving it credit for right now. And they may be willing to sacrifice the markets and maybe to a certain extent near-term, the near-term economy to get the inflation fire extinguished. We can have really healthy debates on both sides of that. But first of all, I've got a few more questions related to that. But first, I'm curious sort of where you're, if you had to lay bets with a bookie, what do you think is going to happen with the Fed's willingness to remain committed here?
Prior to the war in Ukraine, I would have been in the former camp, because that's the historical pattern. They hike, they break things, they cut, they reflate bubbles all over again. And for a generation or more, that's been the norm. And I understand why most traders and market analysts would say, yeah, future is past. What I'm arguing here is that because of what we're seeing in geopolitics, because of what we're seeing in commodities, which is now structural, because of what we're seeing on supply chains, which is now structural, because of the fact that Russia on the commodity complex is in economic war with the West, which won't stop. And China is in an undeclared economic war with the West, if you want to think of it for control of supply chains rather than commodities. Against that backdrop, the geopolitical angle alone, if none of the others, argues that it's much more difficult for the Fed to hike and then cut and then just blow another asset bubble. So if we are going to see a shift in that direction towards the hike and stay high and bust these asset bubbles, it's because of geopolitics, even if they won't say so.
Okay, all right. So it sounds like you think you're maybe joining the minority chorus that I described earlier, where you think the Fed is going to surprise markets, at least by being tougher right now than the markets are currently expecting. Another big question, and I know that you've just said this isn't your predicted outcome here, but let's say the Fed does pivot, right, as you were just mentioning. I would say the conventional wisdom is that all asset prices are going to go, rise again, right? That's going to be stocks and bonds. Easing's good for both. But I have talked to a number of experts on this channel recently, most recently, Bill Fleckenstein, saying that he thinks if the Fed were to do that, that actually instead of dropping, bond yields might really take off, because that's going to be the moment at which the bond market loses confidence in the Fed, where it says, you know what, you guys can't contain this. You're not up to the task. You're basically throwing in the towel, not solving the problem. And we think that we got to take, corrective measures and basically take yields into our own hands now. You don't necessarily have to share that opinion, but I'm just curious, if the Fed were to pivot, which do you think would happen?
Great question. To answer that, let me, if I may, refer back to some work I put out about 5 years ago. Because I have a head in the clouds a lot of the time in this global role, and I'm thinking through future scenarios, very often long before they actually emerge. But a few years back, I was arguing, look, for the moment, we live in this completely demand deficient new normal world where we cut rates, we can blow asset bubbles, we can't get money in people's pockets. We understand that the transmission mechanism is broken, which, by the way, is one of the arguments of Bretton Woods 3 as well, when we come back to that. But if we ever realize we can use fiscal policy again, if we ever actually start printing money and the central bank backs government spending to put money in people's pockets, which is exactly what we did during COVID.
That's what I was about to say. We've actually seen that.
Exactly what we did during COVID. If we ever go that route for whatever reason, and I wasn't predicting COVID, obviously, then we cross a Rubicon. And when you cross that Rubicon, countries that run structural trade surpluses will be able to print that money and their bond market will be controllable. Now, they might need to introduce capital controls too, but provided you've got capital controls of a varying degree and you're running a structural trade surplus, so more money's coming in than going out, you can print money.
So you're
I mean, if inflation gets out of control, you can't. But if inflation stays low, you can get away with that. And that's called MMT. That's the MMT argument. Now, just to add one more point, Japan is the test case for this right now. Because Japan has been doing this for quite some time. They're pegging the 10-year government bond yield, the JGB yield, at 0.25%, because they have massive, massive public debt. And the Bank of Japan is a huge holder of both equities and government bonds. So they're pegging that bond yield. Japan traditionally runs a trade surplus. So they've never had an inflation problem, they've got away with it. The commodity price shift we're seeing now means they're running a trade deficit. What are we seeing in the yen? It's collapsing.
Right.
It's collapsing. People are talking about not just 130, they're talking 140, 150. There's no floor if you keep going in that direction. Now, the US is an exception, and it's the only country that can run a large trade deficit, and the rest of the world will keep paying for it because they need the dollars, which is part of the larger Bretton Woods argument. So to answer your question, to come back to Bill's point, and I like Bill a lot, it's geopolitical. If the dollar and the US remain primary globally, you have a network of countries that will continue to say, we want to sell into the US, earn and keep dollars. They can probably get away with it. I mean, it would be, I think, not the smartest thing to do, but they could get away with it. If the US is seen as stumbling from its primary position, like Japan is now, and suddenly the trade deficit becomes an issue for the first time, yeah, bond yields would spike as the Fed cuts, because everyone would say you're not in control of this process. So it's not political, it's geopolitical. Who's hegemon? If they're still hegemon, they can do it. If they're not, they can't.
All right. Well, right now the US is hegemon, but I'm curious, what if we gave it a color code from red to having fully fallen out of favor and green being completely dominant, where would you put it right now? Is it still pretty solidly green, or is it beginning to get a little yellow?
Here's the key point. If you look at the globe as a whole, it's green with a bit of yellow in it. Absolutely. If you look at what the US recently did, stealing half of Afghanistan's FX reserves and freezing most of Russia's, which is economic war. If you're a net exporter globally, you're thinking, why do I produce X to sell to everybody else, to earn dollars, which A, may be stolen by the US or frozen if I ever do anything that they don't like, and B, I used to buy other things with, but guess what? They're no longer available because I can't get hold of wheat, and I can't get hold of X, and I can't get hold of Y, and I can't get hold of Z because people are hoarding it because structurally prices are going up because of this economic war that's taking place. So what's the point of having dollars? I want wheat, not dollars. If that continues to happen, yeah, we move further and further towards the yellow. But what I think, and this speaks to the larger thesis I've been publishing on recently, is the US will want to retain that primacy globally. And it's in a position to do so, even if it's in a reduced geography. So even if Russia is removed from the map economically, which it kind of is being done, right now, Russia and Belarus, sadly Ukraine too, being removed by Russia, even if it were in the most disruptive phase to extend to China, which is really where this battle is won or lost, the US plus friends could still manage to remain prime or hegemon in the lion's share of the geography and the global economy, and the dollar would still rule. In fact, the dollar would go through the roof because everyone else would realize, well, we need this thing, and it's now harder to earn than it used to be in the past. But for the other countries on the other side of that line, disaster.
All right. I want to dig a little bit more into that, especially as we get to the Bretton Woods 3 part. But real quick, let's now make our route through Ukraine. All right. So since the last time you and I talked, the war in Ukraine has broken out. It has resulted in the economic warfare that you've talked about, basically between Russia and the US and friends. China is involved in that to some way, shape, or form. You also said they're sort of conducting their own sort of undeclared economic war on supply chain, and maybe we can dig into that in just a moment. But the question I had here for you is, how big a wrench has the war thrown into the engines of trade and geopolitics? I think you've already given a pretty sizable nod to the fact that you think it's a pretty darn big wrench.
It's huge. I get very frustrated talking to people in markets who don't recognize how large it is, because at Rabo, we're the world's leading experts on food and agri and trade commodity finance. So we're there on the coalface, if you will, looking at the flow of goods from one country to another and the production of the things that mean we have things to eat. The disruption is just off the charts. It's like the global financial crisis, except it's not being seen in markets in the same way. And therefore markets, even though they've been hit by it more recently because of the Fed, initially the stock market was like, yeah, so, there's a war, whatever. The physical supply chain of things you need to eat, things you need to fill your car, things you need to ensure that A gets to B, are being enormously and consequentially disrupted by this. And if the war doesn't end, and that's a whole separate issue about whether it can end and how it ends, it's very, very hard to see how you put this genie back in the bottle. I really don't see how it can be done.
Yeah, and it's interesting. So the COVID lockdowns those supply chain issues really hit all like the second derivative products, like the cars and the lumber for the homes and things like that. But it seems what's happening here now is it's the first derivative products themselves. It's the base inputs that go into those things, right? It's the energy that goes, the fuel that goes into the car. It's the food that goes into our grocery stores. And of course, that's lower on Maslow's hierarchy of needs. So it's even more extreme of an issue. You think back 10 years ago to the Arab Spring, right, which generally was limited to North Africa and the Middle East, right, where you had all these uprisings in all these countries. And really kind of the key element for that was that food and fuel costs mostly went through the roof in those countries. And you all of a sudden had a material part of the population that just couldn't feed its families or keep them warm. And when that happens, you have really no other alternative than to rise up against who's ever in charge, because the system's just not working for you, right? Hearing you talk about the scope of the impact that you see, especially given your guys' sort of front row seats, how worried about you are of kind of like a global Arab Spring here?
You should all be very worried. I'm not going to speak about specific geographies because I'm not here to do that, and that's not my role. But if you're talking about a generalized risk, absolutely it's up there. I mean, nearly 10 years ago, there was a survey done by the Fed in the US that said 40% of Americans couldn't get hold of $400 in cash in an emergency. I don't know if you recall that.
Oh, I do, yeah.
I'm sure it's far worse now. So let's have that backdrop even in America, and let's say food prices continue to go up at double-digit rates and energy prices continue to go up at double-digit rates. How long before you get a seriously unhappy population in America?
Yeah, and that's in America. We're the best
now
off.
Apply that to the emerging market.
Yeah, exactly. I mean, I know there are countries in Africa that get 50+% of their wheat from Ukraine. I think Syria, I saw some stat, it was like 70 or 80% or something like that. So in those situations, it almost becomes immaterial where the price goes because there's just no supply to be had, right? And obviously that's going to be pretty darn catastrophic. Right? We don't need to really, spin around in that, but it's important that an analyst like you is saying, hey, this is a big deal, folks. And I take it you don't see it as something moderating, right? That okay, there's huge wrench has been thrown into the system here, but people are beginning to find workarounds, and new supply will come online eventually. I'm not detecting a ton of optimism for you that we're going to get to okay in the next 6 months or so.
Look, there are ways the system can adapt. Farmers are very resourceful. The system has internal dynamics which are flexible. But what we need and we don't have is political leadership. Because if we're in a permanent economic war now where food and commodities are weapons, and that's a key point you have to get across, they have been weaponized. This is not happening accidentally. In fact, a point I made before the Ukraine war began, and I shocked my colleagues internally saying, look, there's going to be this war, I'm sure there is. And I did publish beforehand saying, markets are underpricing, how bad this is going to be if it happens, which is as close as you can get to actually saying, I think it will happen, because no one has a crystal ball. I said, the disruption will be huge, but above and beyond that, remember, most of the people who die in a war don't die from being bombed or shot. They die from sickness or starvation, which happens because the war happens to disrupt supply chains around them. That's exactly what's happening. Now, we need political leadership to get away from that. The US, as the breadbasket of the world, could be doing certain things. I mean, it's technical, I won't go into detail now. Europe could be doing certain things too. All the major net food producers in the West could be doing certain things to ensure that the countries that are going to be falling short of food get it, and to ensure that they don't have Russia saying, come over to our camp and our side and we'll feed you, which is exactly what Russia is doing.
Right. Sorry to interrupt you, but let me ask this question, because this is something that I've thought and talked about a lot for many, many years, focusing on resources. And I've increasingly looked at some of the unsustainable trends in our economy, as well as some of our unsustainable trends in our energy systems and in our key resources, food production being an important one of them, but not the only one. And have long worried that as when times are great, everybody's happy and willing to collaborate and cooperate, right? But when times get tough, people turn inward, right? You protect your own. And the fear has been that, or the concern has been that we could become increasingly nationalistic, where it's sort of every country for itself, right? And it's funny, you sort of kicked off this discussion by saying, kind of looking to the past. And we've certainly seen, and even before this war, right, we've seen the rise of more nationalistic candidates in a lot of countries around the world, where maybe we didn't think they would be the last ones to adopt them. But certainly a lot of the bigger democracies have had much more nationalistic politicians recently than I think many folks expected. And you could maybe say Trump was that in the US. You can certainly look at the recent France elections and see that Le Pen made a serious run this time around. How concerned are you that what we could do to get through this together may not materialize because countries are just not willing to think that way anymore? They're lowered down in survival and saying, look, I can't really focus on the rest of the world. I got to take care of my people first.
I was more worried about that a few years ago, to be honest, when I was saying, I think populism is going to be a thing, before people knew what populism was. When I was muttering about maybe one day in the future, you'll get a US president being elected who puts in place a 40% tariff on China, which I was arguing in the mid 2000s. I think we've moved beyond that phase now. The war in Ukraine is acting as a catalyst to actually see nationalists of the world unite, which is kind of odd. And what you're instead seeing is the formation of camps. So I don't worry about, for example, individual European countries breaking away. I don't even think the US would break away. I think, to be fair, and this will be very controversial with some people, I'm not trying to be partisan. A lot of what Trump was arguing when he was in power, the point's been made for him. Europe is now spending a lot more than 2% of GDP on NATO. Germany's no longer going to be buying Russian gas. All points that Trump made to their face and was laughed at in public. Now, if he comes back in 2024 and suddenly walks away from Europe and says that's the end of NATO, of course, one has to change one's view. But as things stand, I think what you're seeing is a coalition and a coalescing of the West versus the rest. And the real issue is, who's the rest Who's in a floating camp? Who can be brought into our camp? Who are the hardcore recidivists, revanchists, and irredentists who are going to be in this new little block themselves, shouting New World Order? That, I think, is the key game now.
Okay, so to put some words in your mouth, it might not be the exact right ones, but there is kind of a Balkanization of the global world order now, where you're getting your big camps. It's not fracturing into every country for itself, but you're getting these sort of, I think of the reality show Survivor, where everybody makes their little, deals, right? Okay, well, an important deal that's being made right now, or an important alliance that's being made right now, it seems, is Russia and China. They've always had their dealings, but you know this much better than I. But it seems that Russia, realizing it's really losing the West here, is turning to China and say, okay, how can we be each other's best buddies here? From your, again, front row seats, you're located right there in Asia. You follow these international markets. How is that evolving, and is that going to, how important is that access going to be around which a big part of geopolitics spins going forward?
It's huge. If I can be a little bit egotistical for a second, I've got another angle on it. That I lived in Russia when I was much younger, in the early 90s, when they were transitioning. I speak it very badly, and I was there on the ground seeing how painful that transition was. So people who think that my view of Russia is taken from a comfortable seat in the West, not understanding them, couldn't be further from the truth. I get them. Look, it's very, very consequential what's going on there. But, and this is one of the key points I wanted to stress, if people look at the map and say Russia, China, people look at China, big commodity importer, Russia, big commodity exporter, big population together, that's a global bloc that will shape the world. Well, yeah, but you're adding apples and bananas. You're not even adding apples and oranges. It doesn't work. It doesn't work very well for either in terms of how the trade flows add up as they currently stand. It doesn't work for either in terms of over-reliance on the other. If all of China's commodity eggs are in the Russian basket, Russia will know that and act accordingly. It doesn't work well for Russia to have all its eggs in the Chinese basket, who historically they don't trust at all, and culturally they don't trust at all, due to their vast Siberian border and the fact that large parts of Russia used to be China, and China knows it and Russia knows it. But more importantly, and this is a key point I was making, if Russia loses the Western markets, it will be very painful for it to transition to selling all those commodities at a far lower price to China, which is what's happening now. So China's buying Russian oil at a huge discount. Maybe it will buy Russian gas at a huge discount. Fantastic. Russia loses lots of money that sells to China. Russia also loses Western supply chains. No one is dealing with Russia now. The Russian economy is predicated on Western technology and has been for hundreds of years. Even under Stalin, the Americans and the British helped to industrialize it. So this is completely true. It's still true today. If you take away those supply chains and those spare parts, within 6 to 12 months, everything starts falling apart. Now, China can step in and say, we will supply you with our Chinese supply chains. At which point the West will say, we're not dealing with China. That's openly being said, whether it's being called friendshoring, or the UK called it the network of liberty last week. That was our attempt to launch the same idea. The threat is there. China steps into Russia, the West steps out of China. Now that would be what we've seen on supply chains, exponentially worse. That would be what we've seen on commodities, exponentially worse. That would be, a complete out of left field shock for all markets. Could it happen? Absolutely it could.
All right, I'm going to ask you just to speculate with some probabilities here. So first off, if Russia loses Western supply chains, which looks kind of like it has at the moment, and let's say China decides not to step in and supply Russia with its supply chains, is Russia toast here? Was this a big strategic blunder?
Yes, they're going to end up eating potatoes and not a lot else. It will take a long time to get there because they still have capital stock, which will grind on. And again, firsthand, I've seen how Russians can maintain things with string and sellotape and just keep things going for a while. but they will lag further and further behind. Their demography is absolutely terrible. They'll be alienated from a large chunk of the world, and their growth potential will just get worse and worse and worse. They can struggle along in glorious autarkic or semi-autarkic isolation if they want to. But anyone who's trying to say that Russia is somehow going to have a gold-backed or commodity-backed currency that's going to just sweep a new world order before it is delusional. They don't understand how the Russian economy actually works. You read Russian academics like Kamil Galeev, if you don't believe me. Read people who are there at the source and who actually know this. It's not going to work for them. And for the Chinese side, here's the key thing. They can get the commodities from Russia, but if you look at the structure of the Chinese economy, it's massive overinvestment in everything. We know that. Massive property bubbles, by the way, completely inconsistent with a gold standard or a commodity standard. Massive fiscal deficits of nearly 20% of GDP in a good year, completely inconsistent with a gold standard or commodity standard. It's laughable to look at America and say, you're fiat and you're in trouble, and look at China and say, you're glorious. China's doing it on stilts, what America is doing. It just happens to run a trade surplus. And that's the key point. They overinvest, overproduce, sell it to America and Europe and others, but mainly America and Europe. So if America and Europe say, we're not going to buy from you anymore, we'll automate and do it at home. We'll produce in Mexico. We'll produce in India. We will subsidize. We will do QE to pay for factories to move out of China to other countries. So even if we're importing, we're not importing from you. China's toast. I mean, the renminbi, they wouldn't have a trade surplus, so therefore the renminbi would collapse. Inflation would go through the roof. What do? Which is why they were asking just last week how they can avoid US sanctions. They called all the banks in and had a meeting, allegedly. What can we do to avoid US sanctions? And the answer was nothing. You can't. If you structurally invest too much and save too much and export too much, you're trapped on the dollar. You're hooked on it.
All right. So I did have a couple of questions here about China, and I'm wrestling with whether to get to them first. I guess before I ask my general questions about China, real quick. So it seems like China has potentially three options here. One, it can really cozy up to Russia and get sanctioned by the US and experience all the pain you just mentioned. It can give Russia the stiff arm and say, no, we're on Team US. Sorry, Russia. And then Russia implodes. Or it can sort of try to chart a middle course and try to be everybody's buddy and say, hey, America, someone's going to have to interact with Russia. I can be that guy, but really be representing your interests. Can they thread that needle, or do they really need to pick a side here? And which side do you think they're going to pick if you had to guess here?
Eventually, they'll have to pick a side. Everybody will. I've been making that argument to many countries for many years when I've been going to see them. Everyone will have to, because this war is so polarizing, so disruptive, so binary, that sides will have to be picked. Now, there'll be gray areas, there'll be gray zones, there will be some small countries that might manage to act as middlemen. But generally speaking, there will be sides drawn. And China will choose Russia's. You
think China will choose Russia?
Absolutely. Absolutely.
Okay.
And that process will, they openly say so. So it's not me, Michael Every, saying that. It's what they say again and again and again, publicly.
Okay, but they've got to be steering down that same path you just laid out for us, that if they enrage the US and the US cuts off the supply chains and QE's factories in other countries and stuff, and the questions I want to get to is exactly how resilient or fragile is China right now. Seeing that same path of what I believe is sort of, let's call it pain, if not ultimate breakdown, why would they choose that?
Well, let's flip it the other way. Let's say they choose the exports to America and Europe. If it is a binary, okay? Let's presume they do. What do you have then? Number one, you have demonstrated that all the rhetoric you've spouted for the past 10 years about the primacy of the autocratic one-party system, the decline of the West, the decline of the US in particular, all of that was nonsense. And actually the West still rules supreme and will continue to. You'll have shown that when push comes to shove, they have the whip hand over you, which is a disaster.
You look foolish to your people, but again, I presume one of the on the other side of this is civil unrest.
There's no strategy going forward to continue rattling cages and trying to achieve what you're trying to achieve. And you can see it can't be achieved. Okay, and that requires a pivot, which they're not capable of carrying out at the moment domestically.
Okay.
Secondly, you've got Russia on your border feeling betrayed and humiliated with nuclear weapons. And those two countries have been to war in the past. So you don't want Russia not on your side, feeling betrayed and angry. So there's no win for them in doing that. There's also no win for them in losing the US.
Yeah.
But this is what happens if you set up a Manichean dynamic, which they have been doing for years, and you presume that it will win purely because you will reach a tipping point whereby enough American corporations, and we are nearly there, and Wall Street and American universities and American media are also pro-China, that effectively they allow the transition from American primacy to Chinese primacy to happen peacefully and in the background, which was absolutely happening. That was happening. But first of all, Trump, and secondly, the Ukraine war, I think have permanently changed that equation.
And that's really interesting, because I think there's still a sentiment largely in the West that China's on the rise, and we the West, the sun may be setting on us. It may take a while, but at some point in the next generation or two, we'll all be speaking Mandarin to our Chinese overlords. And it sounds like you're saying, pardon me?
Busha, you won't be
okay.
right.
But it sounds like you're saying, hey, if there was a trajectory to that destination, we're not on it anymore. And actually, China's really now lodged between a rock and a hard place. They got to make basically one of these two decisions, neither of which is great for their prospects.
Well, this is one of the key points I was making at the beginning. And again, I've been arguing this for a long time, since about 2017, actually. That's when I publicly launched a big report saying this is the way I see things going forward. And of course, didn't really create much of a splash at the time, because everyone had the view that you're still expounding there. I'm not saying it's your view, but that was the common consensus. China is in enormous trouble now. You see more and more recognition of that from people who kind of knew it but didn't want to say it up until now. Part of it is structural, part of it is self-inflicted. Let's take one related but parallel point of view, just the demographic profile. Now everyone says, oh, China's such a huge market, 1.4 billion people, you've got to be there. Well, first of all, it isn't 1.4. Even Chinese demographers themselves admit they've overinflated their population data, which is easy to do. It's probably about 1.25. So that's already, half the population of the US just disappeared. Above and beyond that, if you project forward the fertility rates you see in China right now, which you can kind of measure even if they don't always match up with the official data, by the end of this century, China's population shrinks by 1 billion people. The Chinese population will be smaller than America's by the end of this century.
Right. That's where I was just about to go with my mental math.
I mean, how can we possibly think that this is a rising sun and a setting sun? Now, don't get me wrong. America has got problems, out of its ears and up the kazoo. We know that. We could talk about that all day long. But what I find very frustrating in markets is people tend to take one narrative, like the fiscal deficit, American debt, polarization, Trump, whatever, and say, ergo, the other boat must be rising because ours is sinking. No, the other boat can be sinking even faster than you.
All right. And all these knock-on effects of the Ukraine war, just for a moment, let's forget them just for a second. How do you see China positioned right now? In other words, they've had this sort of reckoning in the real estate market, right? They'd overdeveloped, they'd overlent. What was the bank? Everbank?
Evergrande,
Evergrande. That's right. Sorry, Evergrande. We've seen some pretty big failures in the property market there. The government didn't sort of step in. The state didn't step in to rescue these guys the way that it had in the past. They've kind of been much more, visible about saying, "Hey, we're gonna let some of the rich class here kind of take some lumps." They're talking about a common prosperity, right? There's this sort of sense of like, we're going to take the tough medicine to make sure we have a strong China tomorrow, that type of deal, and we're all in this together. Obviously, they've got new lockdowns right now with COVID that sound pretty draconian, that are obviously going to have massive supply chain ramifications, but they hurt the Chinese economy, no doubt. So just kind of where is China on a strength level? Maybe going back to my red on one end of the spectrum, green on the other. Like, how strong and healthy is China right now?
It depends what lenses you want to wear. If you're a China bull, and there are still some out there, professionally, there are people out there paid to wave flags. You can point to pockets of strength here and here and here, and you can say, oh, it's green with yellow in it. If you take a broader view, looking at the geopolitical aspect that I'm describing and the very stark parallel, so a binary that sits in front of them, and the demographic issue and the debt issue and the internal governance issue that we're seeing with the likes of Common Prosperity, talking about the fact that capital has to be channeled by the state, otherwise it's destabilizing to society and politics. In other words, private businesses have to be told what to do by government, with literally what was said last Friday. I see it as orange with red. That's basically where they sit right now. I mean, the economy is objectively by other people being described as the worst in 30 years. And what tools do you have to stimulate it? Household debt is too high. Government debt is too high. Corporate debt is too high. Property prices are too high. No one really trusts the stock market as an avenue to achieve anything. Exports are currently through the roof and cannot grow anymore from here, and are only likely to go down. So what's your avenue? Now, some people are optimistic.
And the cost of those exports is skyrocketing in a way they can't control.
Absolutely. So the optimists say technology. China will make this giant leap forward. Everyone will be better educated as the population collapses. And somehow, the fact that everyone's better educated and the fact that there are some leading Chinese technology companies will overcome wall-to-wall debt and overinvestment and the geopolitical backdrop. I just don't buy it. I don't know what microchip solves that problem for them. So I see them slowly, and I stress slowly, drifting onto the same path as Japan has, where growth just grinds down to nothing, effectively, and demographic decline. That's pretty much their glide path as far as I can see.
Right. Which is a real narrative buster, because we're also conditioned to know that, well, at least China's going to have, 9% GDP growth this year or whatever, right? All right, look, I'm looking at the time here. Pardon me?
0.9.
Yeah, boy, now that's what you're saying. Now it's going to be 0.9 exactly. And hey, we're at, negative 1.4 here in the US now. All right, well, looking at the time, I know we're back-ended with you. I would love to pull on way more of these threads, but I'm going to have to leave them for our next conversation. Although if there's anything else about Bretton Woods 3 you want to squeak in, feel free to squeak it in. But I want to get to the, okay, so what does all this mean part of the discussion? These videos are watched by regular retail investors who are trying to figure out, okay, how do I prudently protect my wealth and prudently grow it, given this really kind of storm cloud rich macro environment that Michael's just laid out for me here. So I guess first question is so where do you see the markets going from here, at least for the next year or two, given this macro picture? We just had one of the worst starts to at least in the US, one of the worst starts to the year ever, with stocks and bonds being down this, so much so early in the year together. So picking it up from there, what do you think is going to happen?
Okay, full disclosure, this isn't investment advice.
Our interview with Michael will continue over in part 2, which will be released tomorrow as soon as we're finished editing it. To be notified when it comes out, subscribe to this channel if you haven't already by clicking on the subscribe button below, as well as that little bell icon right next to it. Also be sure to hit the like button too while you're down there. And last, if the uncertain future outlook that Michael detailed in this interview has you feeling a little vulnerable about the prospects for your portfolio, then consider scheduling a free, no-strings-attached portfolio review by a financial advisor who can help manage your wealth, keeping in mind the trends and risks that Michael's mentioned here. Just go to Wealthion.com and we'll help set one up for you. Okay, I'll see you next in part 2 of our video interview with Michael Every.